Good morning, everyone, and welcome to our regular daily live market outlook prepared by Windsor Brokers. Today is Wednesday, 29th of August 2012. What to say at the beginning? The highlights of the day. The Hurricane Isaac is now approaching, actually hitting the fortified New Orleans coast. That was exactly 7 years after the disastrous Katrina hurricane hit and made huge damages on New Orleans and the coast of Louisiana. The China economy slows and the government uses some monetary tools in order to fight this. Euro and the shares during the Asian session remained steady. Of course, the focus is on Friday's Jackson Hole meeting, the main focus for this week. Crude oil ticks lower again as expectations of no significant and substantial damage seen on the U.S. refineries on impact of the Isaac hurricane keep the pressure on the downside. Also, the still on the table, the possible release of strategic petrol reserves from United States that were commented last week when they said that they are dusting off the plan for a possible release. Still keep the pressure on the oil price. From yesterday's release from U.S. economy showing that home prices gain again, giving a good signal, but from the other side, the consumer confidence cools down further as the release yesterday was slightly below the expectations. As said, the single currency held steady following yesterday's fresh gains to 125.75, still keeping the upper boundary at 125.88 to 126.00 intact, but positive mood seen from yesterday's rally that was backed by supportive fundamentals from Spain when the bond auction went better than expected. Keep the single currency well supported for now with 125.50 zone so far holding. Sterling eases off its yesterday's high at 158.35. So far holding above 158. Important support. Where are the moving averages? Also 20 and 55 days now containing dips, but still some negative tone seen on the lower time frames. See potential of further easing. More of this we're going to see on our technical part. Brief outlook at dollar yen that moves sideways after losing traction on approach to 79 barrier, with 78.44 initial support still holding, the downside being touched yesterday. More negative tone, I would say, at this point is seen as studies are still rather negative on the lower time frames. The dollar Swiss is spent Asian session in sideways trading, slight corrective action seen close to the end of Asian and the beginning of European session, ticking higher of yesterday's low at 95.46 with the 95.37 previous low staying intact for now. But overall picture is still quite negative as the pair remains in the short-term downtrend of 99.70, hitting so far 95.37 ahead of more significant 95.00 and 94.60 zone as outlook remains quite negative at this point. I would say more likely scenario would be further easing. As said, the oil remains under pressure despite a bounce of 2 days ago low at 94.40. That was so far capped at 96.51 with overnight action seeing further easing with 95.64 seen so far. This is the low of the day for today. And gold, we're going to just take a brief look at gold. Remains well supported for now. I would say in the past couple of days from last Thursday, stays in the sideways movements with the range defined on the downside by 1657, on the upside at 1676, still holding the momentum for possible further extension higher as our main target remains at 1690, 1700, but failure to clear these levels might be still increasing the risk. As said, positive tone, especially on the larger time frames, keeps the upside favored, but some overextended conditions still see risk of further consolidative action before the yellow metal starts heading higher. From today's calendar, we have the important releases from Switzerland and Germany, as well as a batch of data from United States. Already released the COF economic barometer. I don't know why we don't have it in our calendar unless it needs some refreshing. The COF economic barometer for August 152 was the forecast compared to 1.43 the previous month release, and 157 was released much better than expected, showing the Swiss economy is still on the healthy base. The German inflation for August is due at 12 o'clock GMT. Actually, this is the release of preliminary CPI monthly for Germany. Is going to be released at 12 o'clock GMT. 0.1% is the forecast compared to, sorry, we don't have a forecast. 1.7% is the previous release. From America's Canadian PPI starts at 12:30 GMT for July, 0.5% above the previous month, minus 0.3% release. Very important releases from America. The preliminary GDP for the second quarter showing healthy growth of 1.7% compared to 1.5% of the first quarter, while GDP price index is expected to stay unchanged according to the forecast at 1.6%. July pending home sales are due at 1400 GMT. 1.3% is forecast increase from a negative release of month of June at minus 1.4%. Crude oil inventories are due at 1430 GMT, and again crude oil stocks are again forecasted to have fallen for the fifth week in a row on the last week due to the lower imports and expanded due to the lower imports, with the 1.5 million barrels draw forecasted for today compared to surprisingly and unexpected last week's draw of minus 5.4 million barrels. And that were the all significant releases for today from today's calendar. Not to waste our time more, we are going to move to our technical part, and after this you will have time for your questions and answers. As always, we start with the single currency, as no more significant movements seen yesterday. Yesterday's bounce higher from 124.64 low, nearly regained the 125.88. That now acts as a quite strong barrier on the single currency, as we can see here, but failed to touch this level, and the current corrective easing is seen at the beginning of the European session, breaking below the overnight base at around 125.50, where 20 days exponential moving average held the downside during the Asian Pacific trading, with exposing immediately the next strong support at 125.30, where we have the 38.2% Fibonacci retracement of the latest up leg from 124.64 to 125.75, along with the yesterday's intraday high at 125. 2 days ago high at 125.34, and also reinforced by ascending 55 days moving average. Ideally, this zone should contain the dips, as it offers quite a strong support, but further easing sees risk of retesting 125 zone. That is quite significant, where we have the 61.8% retracement and a round figure support, and basically I would say risk would be seen on loss of this level and more significant 124.64. That will be sort of confirmation of double top formation on the hourly and 4-hour chart with further losses below 124.64 to signal completing the head and shoulders pattern and possible further retracement of the broader rally from 122.50 zone that peaked so far at 125.88. Of course, upside break above 125.88, 126 would avert downside risk and signal resumption of the short-term rally from 120.42 end of July low that so far peaked at 125.88. More positive tone seen on the daily chart as all studies are still in the upside mode, but clearance of 126 is very significant barrier. There is also 38.2% retracement of the broader down move from 134.85 to 120.42 would be additional confirmation and open way towards 126.80 and 127.00 as the next targets. Important that the pair managed to break above 90 days moving average that was limiting the downside, limiting the upside during the past week. But current congestion needs to see break above 126 in order to resume. Otherwise, as said, the risk of forming double top and further easing is quite high. Of course, today's release of German inflation data would be quite a good indicator, while main focus is still on Friday's Fed meeting, where we'll have much more clues and more fresh direction for all the instruments. And cable's outlook remains in a way positive as the pair bounces off 157.53 yesterday's low with 157.58.35 seen so far, but still sort of bearish elements are present in the current outlook as the corrective easing that was kept above 158.00 as initial support, and also 38.2% retracement of the latest up leg from 157.53 to 158.35. It seems that weakening structure on the hourly chart is pointing towards 158, and basically in case of losing this support, we might see the further easing as the pair's short-term price action remains still in the downtrend of 159.11 peak of last week, with risk seen on loss of 158.00 and another important 157.84 Fibonacci 61.8% to turn more focus towards the downside. As the Europe starts, the losses on sterling started to accelerate, and the immediate risk is seen on test and possible break below 158. That will further weaken the short-term outlook. On the upside, the alternative scenario sees requires a break above initial barrier at 158.34. Pardon, 158.35. Overnight's or yesterday's high that will trigger a stronger retracement of the latest 159.11, 157.53 down leg, with the break of another significant 158.50, where is 61.8% retracement, and 158.68 peak of last Friday required to to confirm the higher low at 157.53 and turn focus towards 159.11. So more risk at the near term is seen towards the downside as the pair continues now to slide and approaches the important 158 level, with the studies on the hourly chart being turned towards the downside, and the 4-hour ones already in the negative territory with the 150 break of 158 and 157.80. That is Fibonacci, and also reinforced by 55 days exponential moving average. Sees risk of test of a very important 157.53 and the 157.55, where is currently bull trend line, and basically loss of these levels is to trigger a stronger correction and stronger retracement of the up leg from 154.89 to 159.11. Daily structure is still quite positive, especially after the pair broke above 200 days moving average and the 2 months range top at 157.60-70 zone, keeping the upside more in focus. Still with the 61.8% retracement of 163 to 152.67 seen as a immediate obstacle at this point, as this level so far kept the upside capped. Brief break above 159 barrier did not materialize in any stronger movements, and the pair slid below this level and basically now is attacking a 158 zone. It's, as said, in the near term price action, quite high risk seen on possible break below 158 that will bring the pair back towards the previous strong resistance and now acting as strong support range tops at 157.70 and 157.50 along with 157.15, where is the 200 days moving average, and basically break below 157.15 and 157.00. Nothing much changed from yesterday's comments, actually, now I realized, would weaken the daily structure and keep the upside intact for now. As we said at the beginning, the dollar-yen's near-term price action is rather sideways movements with the studies in a neutral and slightly negative mode after upside failure at 78.83. This was initial resistance, failing to regain 79.00 seen as initial break point for further recovery. 38.2% retracement of the latest down move from 79.65 to 78.27 kept the upside limited, along with descending 20 days moving average that so far keeps the pressure towards the downside. I would say immediate risk seen on a loss of 78.44.36. That will open 78.27, 78.15, and a very significant 78 support zone and the base, loss of which would further weaken the structure, as the dollar-yen remains in the sort of sideways movements of 77.65 1st of June low, following the descent from a yearly peak at 84.17, with current action being entrenched within 78 and 80.61 range at the upper extreme, with the narrower range seen topped at around the 80 zone and the 79.65, the recent peak, as false break to clear the 200 days moving average occurred last week. More pressure, I would say, is seen at this point, and basically break above either side of the current range would give the fresh direction, but as said, quite a negative tone seen on the lower time frames keeps the immediate focus more towards the downside. Break above 79 and the 79.25, what is currently 200 days moving average, is to avert immediate downside risk and then focus towards 79.65 and 80.00 as immediate upside targets in case of clearance of 79.25 barriers. And the dollar Swiss basically remains at the back foot of following upside rejection at 96.34, yesterday's peak, as dips slid down to 95.46, just ahead of 95.37, previous low with the break below the trend line, and turning studies into the negative territory. Some recovery attempts are seen of yesterday's 94.546 low, with the acceleration seen on the opening of European session, as the pair heads towards initial barrier at 96 as psychological barrier. 95.80 first, we have the 38.2% retracement along with the 55 days exponential moving average, with the 96.00 seen as a round figure and the 61.8%, and basically only break above this level is to turn the near-term focus higher for 96.34 seen as initial barrier. More negative tone seen on the 4-hour chart, as larger downtrend remains intact for now, following the upside yesterday's rejection at the 96.34. That is now still acting as a lower top, and any failure to clear this level, basically this zone is also reinforced by descending 55 days exponential moving average. Any failure under this level would be seen as confirmation of the lower top and possible further weakness, as the pair remains in the strong downtrend of 99.70 peak of 24th of July 2012. That is defined by descending bear trend line currently at 97.00 with that cross seen of 20 days crossing below 55 days moving average, and price action moving below the 90 days moving average that was holding the downside in the past couple of days. Seeing more risk along with the negative studies, all studies are in the negative territory, seeing more risk towards the downside. Immediate target on the downside on a loss of 95.37 comes at 95 zone, where it's 50% retracement ahead of either static supports 94.61 and 94.20. As set break above initial 96.34 and the more significant 97 level, where is also the trend line resistance, would bring some more positive sentiment into the picture, while key barrier remains at 98 zone, and only break above this level is to improve the current structure and confirm a higher low of the broader uptrend at 95.40 zone. And the crude oil, as said at the beginning, again under slight pressure following yesterday's failure to break 96.50 zone, where 61.8% retracement of the latest down leg from 97.70 down to 94.40, as the short-term structure remains skewed towards the downside following a descent from 98.27 peak of last week. At this point, hourly studies are losing traction following yesterday's upside rejection, with possible further easing seen towards, as the pair lost the initial overnight support at 95.70. Brief break was seen to 95.64, 95.40, and then 95.12 seen as the next minor supports, with basically loss of 95.00 seen as a main risk for a further slide towards 94.40. 4-hour structure is still holding a rather negative tone, as the price action fails to clear the 20 days exponential moving average. That is now basically turning from a down move, descending mode towards the sideways mode, and we might see some further consolidative action, as studies are, I would say, neutral to negative at this point, with the break above 96.50 required to activate the upside targets, while loss of 95.00 is seeing risk of further retracement of the broader up move from 86.91 to 98.27, loss of 95 to open 94.40 as the key short-term support ahead of 94.00. That also marks a 38.2 Fibonacci retracement. Okay, this we said in the introduction, gold is in a rather sideways a neutral mode with a range of 1657 and 1676, pardon, seen so far, though the I do apologize, the hourly studies are slightly losing traction at this point, as a series of lower highs, with the latest one seen at 1672 yesterday, still keep the possibility of retesting the downside support and the range floor at 1657 in play. 4-hour chart studies are turning lower, all in descending mode, and this is basically the signal of possible further corrective action of the broader up move from 1590 to 1676. So far, the 20 days exponential moving average hold the downside currently at 1663, and this is the first support, dynamic support ahead of static one at 1657. That also marks 23.6% retracement, and break here is to open and next barriers, the dynamic one 1648 and 38.2% retracement at approximately 1644. Ideally, any stronger dips should be contained here in order to keep the positive structure in plane, but studies still pointing lower, keep some increased risk towards the downside. Daily studies are in the positive territory, but overbought conditions seen on the daily chart again see signal of possible stronger corrective action. Main support I would say at this point is at around 1643, where is 200 days moving average and the previous range top, and increased risk would be seen on a break below 1640, while holding above these levels, and any reversal of any stronger pullback will still keep the upside favored. Break above yesterday's 2 days ago high at 1676 to open 1679 and 1697, where is also the 1689, the 61.8% retracement, and 1697 peak of 27th of March 2012, close to a strong psychological barrier at $1,700 per ounce. With of course most of the instruments are waiting Friday's Fed meeting that will give us a more clear picture of future near-term movements for most of the instruments. That was all for today. Now it's your turn to submit your questions. If you have any questions for today, please submit them now. Okay, sometimes I'm glad if there is no questions, it means that we really covered all important points, and you have nothing to ask me. But okay, in this case, if there is no questions, then I would like to thank you all for being with us, and we expect you, of course, tomorrow again at our regular time at 7:00 GMT or 10 o'clock local Cyprus time. Wish you a nice Wednesday, and of course, very good and profitable trading. Until tomorrow, I wish you good luck.